Greetings and welcome to the latest edition of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like the formerly Golden State of California to more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, we are reviewing a recent report by the New York Post entitled Next California Exodus has been triggered as brokers are flooded with calls referring, of course, to the ongoing Cal exit trend. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, as you know, SpaceX went public earlier this year at a valuation exceeding $2 trillion with the T dollars. The IPO made Elon Musk the richest person in history to reach $1 trillion in net worth. Also, the first person in history. Well, we could have a long and academic conversation about that, talking about the Roman Empire, but we'll save that for another day. Now, it also made approximately 4,400 SpaceX employees millionaires in a single day. That sounds great until you remember many of those employees are based in California, and California's top marginal individual income tax rate is 13.3%. Actually, it's 14.4, depending on how you do the math. But regardless, it's high. We'll stick with the 13.3 for now. On $10 million in newly liquid equity taxed at ordinary income rates as opposed to capital gains rates, California's tax bill, not counting the federal tax bill, would be $1.33 million. But if you were in Florida or Texas or another state without income tax at the state level, that would be zero. In other words, you would keep an additional $1.33 million in your pocket. The New York Post reported that brokers in South Florida are being flooded with calls. The Fort Lauderdale Downtown Development Authority CEO and president Jenny Morgan stated that the California area codes have already started showing up and that the conversations are evolving. Whatever that means, I translate that as people are getting the heck out of California. Not from speculation, but from all of the redomestications we've done to date. Joe DeGrossa, chair of DeGrossa Capital Partners, described the SpaceX IPO as a transitional event, which is an interesting phraseology, where executives will see the biggest cash day most of them have ever experienced, and many of them are not making millions, but tens of millions of dollars overnight. His assessment that is going to have them thinking long and hard about the Silicon Shores of South Florida generally and Miami specifically. And if you have watched earlier presentations on Legal Bites, you know this is not the first wave. It is the latest wave on an entire ocean of waves, forgive the lack of a better metaphor, and it is larger than the ones that preceded it. As you know, Google co-founder Larry Page spent $173.4 million on 2 homes in Miami back in December. Mark Zuckerberg of Meta purchased a $170 million mansion in Miami in March. Palantir co-founder Peter Thiel left California. Jeff Bezos also left California. Those departures involved individuals whose net worth is measured in billions. The SpaceX IPO wave involves approximately 4,400 people whose net worth is measured in millions to tens of millions. Now, the volume is different, but the mathematical concept is the same. OpenAI and Anthropic are also preparing for liquidity events. Now, the details are not public, but the implication is clear. Another cohort of California-based technology employees will face a really serious decision about where to be a resident on the day their equity converts to cash. Now, remember, California taxes ordinary income at 13.3%. Florida taxes it at zero, as does Texas. For an employee receiving 20 million bucks in a liquidity event, the difference between California and Florida or Texas is almost $3 million. That is not a planning opportunity. That is a really, really nice house. Well, at least I think it is. Maybe you think it's a house in the slums, but we'll just have to agree to disagree. And if you feel that way, feel free to send some money my way if you don't know what to do with it. California has the highest state level tax in the country, as we covered in our 50 state series earlier this year. It has the highest individual income tax rate, and it ranks in position 48th, that is to say, almost in last place on the Tax Foundation's most recent State Tax Competitiveness Index survey. The billionaire wealth tax is on the November ballot and will likely pass. The co-author of the ballot measure has admitted on the record it will not be a one-time event. And a sitting congressman, Ro Khanna, has stated that the threshold must drop from $1 billion with a B to $50 million with an M dollars. Read between the lines, it probably won't stop there. And the IPO calendar is creating thousands of new millionaires who have exactly one chance to establish residency in a no income tax state before their liquidity event is taxed. The people leaving are not retiring. They are founding companies, hiring employees, and deploying capital. And when they leave, it's not just the wealth that leaves, but the income tax revenue base leaves with them. The capital gains tax revenue leaves with them. The jobs they create and the businesses they develop leave with them. California is not losing its wealthiest residents to retirement communities. It is losing them to other states. To recap very briefly, the SpaceX IPO created a lot of new, very wealthy people overnight. The people aren't new, obviously, but their wealth is. The California area codes are here in South Florida. The billionaire tax is coming and will almost certainly pass. And other states like Florida and Texas, to name two, impose no state-level personal income or capital gains tax. That math does not require an explanation. It requires a decision. With this context in mind, redomestication is the lesser known legal process of transferring an existing company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income tax consequences, but only when performed with the strict formalities required by the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. When executed by a competent, experienced professional to very important criteria, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. That is to say, there is no operational or financial disruption. I have successfully completed redomestications from all 50 states, yes, including California, and for limited liability companies, partnerships, sub-S entities, and subchapter C corporations. And knocking on wood, we have a 100% success rate to date. If somebody is telling you, oh, you can't redomesticate out of California, they are years behind. Please get better advice. Now, foreign entity registration is not the same thing as redomestication, because foreign entity registration, also referred to as foreign qualification, among other terminologies, does not change the company's domicile. It does the opposite. In fact, it keeps the entity in the former state, California in our example, indefinitely, meaning you continue paying the California Franchise Tax Board that annual fee, and merely adds a second layer of compliance obligations in the new state. Meanwhile, a traditional merger, which is also not the same thing as redomestication, creates a new distinct entity in the destination state, may and often does require the issuance of a new federal employer identification number, and can trigger serious tax consequences. Finally, dissolution should not enter the conversation at all, because dissolution terminates the company. Dissolution is a going out of business maneuver, not a relocation mechanism. Dissolution is often a taxable event and, when performed inadvisedly, can expose the owners of the company to unlimited personal, emphasis on the word personal, joint and several liability for the company's liabilities, known and unknown, because that so-called veil no longer exists. So if you have a so-called professional recommending dissolution as a relocation mechanism, again, get better advice. Redomestication, when paired with a change of personal residency and this is an important a reduction or outright cessation of business operations in that former state, can reduce or even eliminate state tax exposure there for the entity and its owners. Don't take my word for it. Ask your CPA. Now is the time to consider redomestication before the California legislature changes the law to hinder or even eliminate this option. If you have questions regarding potentially redomesticating your existing LLC or corporation out of California or out of another state, please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information illuminating. As always, the information in this presentation is necessarily general in nature and is not legal or tax advice, nor should it be construed as such, because that advice definitionally must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier presentations on these controversial and timely topics, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to that opportunity to speak and perhaps even work with you very soon.